What's going on, everybody? What's up, Pookie's Revenge? What's up, Hainsworth? Jessica Yun? What's going on? Durham Dad? What's up? Actual Trash? Looks like Pookie's Revenge was first this time. We got Brizzy Frey. What's going on? What's up, everyone? Welcome to the live stream. Got Actual Trash Plays on the scene. Sam Jarrells is here and ready. What's going on, Sam? Indie Music, welcome. What's up, Steven Ibanez? What's up, penny boys and gals? It's your boy, What the Duck here, and it is time for, once again, another trading class video. What's going on, Stephen Buell? Ups and downs. GB Slaps, Sub Beast Nick, John Wick, Steve S. What's going on, everybody? Adam Friedman's here. Eclipse is in the house. So, everyone's been asking, and I'm talking about everyone's been asking for an options trading class, so here it is. Rock your mic, what's going on? Welcome to the chat. So tonight we'll be going over how calls work and some other basic options strategies. This is going to be a multi-day class, so this is just day one of our options trading class. If you have any questions about this class or stocks in general, make sure to join the Penny Boys alert service at discord.gg/pennyboys so that you can get in on all the PBU class discussions, cash giveaways, and everything else that comes with being a part of the Penny Boys community. And once again, that's Penny Boys. That's going to be discord.gg/pennyboys, or you can just look up Penny Boys on Facebook. What's going on, Letitia, Michelle? What's going on, Subbies SNCK? Oh, Derelicts. That's much easier. Derelicts, what's going on? So, let's just jump right into it, right into our options class. So I'm going to bring up our first slide of the day. So what is a call? Well, the type of call that I'm going to be going over tonight, it's not the one that you make on a telephone. A cell phone maybe, that is if you're trading on your smartphone, but the type of call that I'm talking about is an option call. So an option call is a contract that gives you the right to buy a stock at a specific price on or before a certain date, that date being the expiration date. So think of it like food. Once it expires, it becomes worthless because no one's going to want to buy expired food. So you can buy call options the same way that you can buy stocks on your Webull, Robinhood, or whatever broker you want to use. Remember though, you cannot trade options during extended hours. So you can't trade it between, I know Webull you can trade at 4 a.m. up until the market opens at 9:30, and you can trade in after hours, but with options that is not the case. What's going on, Brimac? What's going on, Travis? Welcome to the chat. So options are a great tool to have in your trading arsenal because they can be used in many different ways. You can use them to add income to your account, just like trading stocks or crypto are ways of adding income. This form of option trading is known as trading a naked option. This means just buying an option to try to generate money off of it. It's one of the more basic ways of options trading. But options can also be used to protect your other investments. This form of option trading is referred to as using options as a hedge against a declining stock market to limit your losses. It's also known as hedging. What I mean by that is buying an option in combination with a stock, and we'll be going over that in detail later on. Before we go any further, I just want to say options are risky. Once again, options are risky. Congratulations, Pookie Revenge. It looks like you got your Webull margin account approved. It's a good trick, though, is to have both a margin and a cash account, so that's awesome on you, Pookie's Revenge. And I'm going to repeat that one more time. Options are very, very, very risky. Trading stocks are risky, but trading stocks is like telling your wife that she looks fat in the dress that she's wearing. That's that type of risky. Whereas trading options is like telling your wife that you just cheated on her with her sister and her best friend at the same time on her birthday, which is also your anniversary, and then telling her that she looks fat in the dress that she's wearing. There's a lot more downside with options trading than there is with stocks. But unlike cheating or calling your girlfriend fat, there's also a lot of potential upside as well as as well when it comes to stocks and especially with options trading. And no one should ever do what I just mentioned about calling your wife fat or doing any of that stuff. Don't do that. That is not advised. Options belong to a group called derivatives. Joseph Malik just goes, bruh. That's great. So a derivative's price is dependent or derived from the price of another entity. Options are derivatives of stock prices, meaning an option's value is dependent on the price of the stock that the contract is based off of, the contract being the option. Rocker Mike goes, yeah, I'm out. Was that analogy a little bit too much for you, Rocker Mike? John Wick says, well, in that case, I've done options before. Another example of a derivative is future trading. So like there's a futures, because the price of futures depends on the prices or buying and selling of other groups of stocks. So, how does buying a call work? Well, let's just say that you're looking to buy a wedding ring, right? But you don't have a girlfriend yet or anyone in mind. But you see, and you haven't called her fat. You haven't called your future girlfriend fat, and you haven't cheated on her with her best friend and her, her cousin, all that on the same time. But so you see a wedding ring that you really, really want, and the current price is something that you can afford. Let's just say the wedding ring costs $10,000, but you're worried you won't be able to afford it in the future because you think that the price of jewelry, or just the price of that wedding ring, is going to go up in the future. So you could just buy the wedding ring now. And that's like buying a stock. You just buy it straight up. But then you have to pay for the full ring right away, and if you don't get a girlfriend down the line and you need the money, well, you have to sell the ring for a higher price than you bought it, and that's not technically guaranteed, even if it's in mint condition at the time. So, let's just say that you can go to the jeweler and ask, or just say, hey, Mr. Guy, I want to buy that ring, but I don't need it right now. I don't need it right away. So, can I buy the option to buy this ring for $10,000 in 4 years? Now, obviously, he won't just hold the ring for you for free. So he'll say, yeah, you can buy the option to buy this ring in 4 years. And you'll be able to buy it for $10,000 in 4 years. But you're going to have to make a $2,000 non-refundable down payment. So you shake hands, you sign some papers, and now he's saving that ring for you. So the down payment is like the premium for an option contract. So you paid him the $2,000 down payment. That's what the premium is. So the premium is what you had to pay right away for that option contract. It's a price you had to pay in order to purchase the option to buy the ring, or in options trading, it's what you had to pay in order to purchase the option to buy the stock in the future. Now remember, this is just the option to buy the ring in the future, or the stock in the future. You don't have to buy it. It's not something you're going to be forced to do. The same goes for buying a call. You're buying the option to buy the stock at a certain price in the future, but it's not an obligation. So that's the premium, where as the price of the $10,000, the price, or the $10,000 in this example, is the strike price. So that's what the stock is actually worth. It's the stock price, strike price. So let's just say that in 4 years you go back to that same jeweler, and remember, you bought the option to purchase that ring for $10,000 in 4 years. So now that contract is about to expire. So you go there and you see that the ring is now worth $20,000. Well, guess what? You're now able to buy that ring that is now worth $20,000 for only $10,000. So your profit is $10,000 minus your down payment, which was $2,000. So in theory, you just made $8,000 if you sell it right away. Now, if you go back to the same place, and this is a different example, you see that the ring is only worth $7,000 now. Well, your option contract is worthless because obviously you're not going to buy that ring for $10,000 when it's only worth $7,000. So you're now out of your down payment of $2,000. So with options trading, you don't have to wait until the option expiration date to expire, however. So let's say you bought an option for October 10th. You can sell that option anytime before October 10th. This is known as closing out a position. This is basically selling their option at the market, in the market. Typically speaking, only about 10% of options get exercised, meaning the trader bought the option to buy a stock in the future and actually does that. They actually do buy in the future at the expiration date. 60% get closed out early or traded, and 30% expire worthless, which means they lost their initial investment for that option. So, two terms you're going to hear a lot in options is in the money and out of the money. So, an in the money option is when the strike price is below the current stock price. An out of the money option is when the strike price is above the current stock price. So that's the in the money and out of the money. So the way that option prices are formed is by using intrinsic value and extrinsic value. Now, extrinsic value is also referred to as time value. And options premium is in its intrinsic value plus its time value. So that's what options premium is. It's its intrinsic value plus its time value. So the intrinsic value is of a call option is the in the money amount of an option contract, aka the amount above the strike price that the stock is currently trading. Time value is the added value that we have to pay for an option above that intrinsic value. So options are almost always above their intrinsic value, seeing as, usually, even though it might not always occur, the probability of an event occurring is never absolutely zero, even if it is highly unlikely. Because you know how stocks are. Something could happen. Something can always happen with stock trading. So, why trade options? Well, as you see, it's high risk. You do have the possibility of losing everything that you put into it if the contract expires worthless. Like in the engagement ring example, that $2,000 down payment was lost. That's everything that he put into his initial investment. What's going on, playlets? So that down payment was lost. However, with stocks, you only lose your full investment if the stock goes down to $0. But wherever there is high risk, there is always high reward. And that's the same with options trading. You can use options trading like speculation trading. This means if you think that a stock is going to go up in the future, you can buy a stock or option. The reason why some traders buy options instead of the stock is that the call option might only cost a few dollars, whereas buying the full price of the stock might be a few hundred. Because with options trading, you're buying that down payment or the premium. Another way that traders use options trading is hedging. That's actually why options were invented. It's like using options as an insurance policy. Let's say that you want to buy stock ABC as a long hold. Well, you can also purchase a put option to limit your downside risk or make money both ways. And we'll be going over puts and hedging in more detail later on. So, how do we read an option? And Jessica Young asked, do we need to sell before the expiration date? Once it goes past the expiration date, think of it like food. Would you buy food once it's expired? No. That's why people can't sell food once it's expired. You can't buy or you can't sell an option once it's expired. It's completely worthless. It's garbage. You throw in the garbage like you would throw out spoiled food. However, you can sell it before the you can sell before the expiration date. But you don't. You can do it before. You can do it at. You don't necessarily have to. It's your choice. But once it's past the expiration date, it's expired food. So, you have so as far as reading options go, you have your volume, or VLM, or volume. This tells us how many contracts of the option were traded during the latest session. There's the bid price, which is the highest price a buyer will currently pay, and the ask price, which is the lowest price a seller will sell for. Then the spread is the difference between these two. Oh, and as far as buying that option so you buy the option, you're buying the option to buy the stock at a certain price, but you don't have to. Just like with that ring example, it was worth $7,000 when he got there. He bought the option to buy it for $10,000, so it's worthless. He doesn't have to buy it for $10,000. He can just say, all right, well, I'll just buy it for $7,000, or he can just not buy it at all. So you don't have to buy. It's an option to buy. That's why it's called options. It's an option to buy. So the spread is the difference between the bid and the ask. So then we also have implied bid volatility. This is the market's forecast of likely movement in the price, or assumed volatility. This has to do with the projected price direction and speed. We also have the open interest, which shows us the total number of contracts that the option currently has outstanding, which has yet to be closed. This number decreases as the trades are closed. We also have delta. Delta is like probability. So a 30 delta option has, give or take, a 30% chance of expiring in the money. Gamma is the speed the option is moving in or out of the money. So this can be thought of as the movement of the delta. Vega, and I know this sounds like a fraternity in college, Vega shows the amount the option price is expected to change if the implied volatility changes by 1 point. Theta shows us the value an option would lose with the passing of 1 day's time. Now, delta, gamma, vega, theta, these are all known as Greeks. And we will go over those in detail in our later video, because this is a multi-day class. We will also go over long calls, spreads, speculation trading, hedging, puts, time decay, and a bunch more in our future option classes. So make sure that you subscribe to me here on YouTube so you can be updated when those classes go live. And make sure that you also follow me on Twitter. I'm going to pull that up right there. That is my Twitter. That's also my Instagram and all that good stuff. So make sure that you follow me on Twitter and Instagram. I'll be posting tips and tricks on options trading. So I'll actually be posting some of the stuff that we just went over. I'll just, the gamma and how that all works. I'll be posting some of those tricks and tips on my Instagram, on my Twitter, as well as just stock trading tips in general, and some free alerts from the Penny Boys crew for those of you who are not in premium yet. And I'll also be posting some alert overviews on these social media platforms as well, going over the whys and the hows of our past alerts. Like, this is how I bought into this stock. This is the percentage I bought in. I bought 10% at this price. This is why I did that. I bought 20% after this during this dip. This is why. This is when I sold. This is when I put my stop loss. All that kind of stuff. I'll be going over all that as well. So just give me a follow, a like, a subscribe, and all that good stuff if you feel like it. Once I get enough followers, I'll also be doing some fun giveaways on Instagram and Twitter as well as YouTube. And of course, speaking of giveaways, I know we already did our $100 giveaway, $75, $50. We did a bunch of our bigger giveaways, and we are going to be doing some more of those as well. We'll be doing a bunch more, $100, $50, $75 giveaways. Congratulations to those who did win. But speaking of giveaways, the Penny Boys crew is doing 3 separate $25 cash giveaways on Monday. These can be redeemed by either Visa e-gift cards, Cash App, Venmo, or any of these types of platforms, which is why it's a cash giveaway. It's just as good as cash. When someone Venmos you, it's like they're handing you $25. So you can use that money on whatever you like. So make sure that you join us at discord.gg/pennyboys to find out how to get into that free raffle. I'll also be opening this up to questions in a minute. So there's also no limit on entries for that raffle. So if you're already in premium, check out the raffle channel on our Discord. It's in the contest section, and get your raffle tickets. It's free it's free for you to get those tickets. You don't have to do anything really. You don't have to pay any money. You don't have to do anything crazy. It's really, really easy to get a raffle ticket. I'll also be giving out 5 raffle tickets. That's 5 raffle tickets to the best comment about options trading, or just Penny Boys in general, on this YouTube video, this current options YouTube video. So the best comment will get 5 raffle tickets, and that will be due on, let's say, Sunday. I'll announce the winner. So leave a like, comment, and subscribe so you can get in on the action. And check Penny Boys. That's at pennyboys.discord.gg/pennyboys. So check us out so that you can join me, What the Duck, and together we can all make some bread. All right, I'm going to leave this open to some questions. Rocky Mike asks, no sports analogies today. No, I decided to do the ring one, and I kept it on the wife and girlfriend analogies instead. I know my last options class I was talking about sports. I was talking about like betting and how that kind of has to do with options, but you can check that one out on the channel, of course. But yeah, so best comment. Let's see who gets that. And that's not going to be on this chat. That's going to be like on the actual comments. For those of you who are watching the video, I know we have a lot of viewers. I know options is very popular. This is one of our top viewers so far. I was like, dude, how are you going to tell us at the end of the video? Kev K thought I was talking about the best one on this chat. No, it's the comments. So you can it's due on Sunday. You can think it out. It could be funny. You know me. I like my humor. Kev, I know you're very humorous. So yeah, it could be funny. It could be serious. It could be whatever you want, whatever you feel like posting on the comment section. You can do more than one, and the best comment will get those 5 raffle tickets. Most entries for our raffle is just 1 ticket, so 5 raffle tickets is actually a pretty decent amount, and that's going to be going towards the $25 raffle giveaways. Should you want to find Hainsworth asks, when choosing a call, what is a good theta to have? So we will be going over the Greeks in detail. I don't want to go over too much right now, but yeah, so theta does show us the value an option would lose with passing of 1 day's time. But yeah, we'll go over all of that in detail as far as the Greeks go, because those are pretty confusing. So Travis asks, so if I were to hold an option that is up through expiration, I would take control of those stocks at strike price. So yeah, so basically, if you hold it all the way to expiration, then you are executing your option. So yeah, if you, let's say your strike price is $500, and yeah, you would actually get those stocks at that price. So ideally, it would be pretty good amount lower than what the current stock is. So if your option price is $500 and you execute it, then you'll be getting it for $500. You're getting for $500. Let's say it's worth $700. That's pretty good. Or you can just sell it right off and just make that $200. But that's as long as it's a call option. Yeah, as Pookie Revenge said. Yeah. But yeah, so that's known as closing out a position, which is basically selling your option to the market. Is what if you do that beforehand. Like if you decide to sell beforehand, you'll be closing out your position. But yeah, usually only 10% of options actually get exercised, which is what you're talking about. So if you exercise your position, you're actually you bought the option to buy a stock in the future, and you're actually doing that. You're actually buying the stock in the future with that price. 60% get closed out early or traded, and 30% expire worthless, which means that you lost all your money. So Stephen Ivana says, so having the options of your wife's sister and best friend is not a good thing. Well, having the option is different than actually following through with that option. If you have the option, that maybe says something about you. Maybe you're good looking. Maybe you know how to talk really well. Maybe it's something on their part. You never know. That's just the option, though. If you actually execute that option, well, then you could be in trouble. Then your relationship will expire worthless. Brizzy Frey says, is it better to have a smaller difference between bid and ask? So basically, yeah, as Pookie Brent says, the smaller the difference between the two, the greater liquidity. So the difference between the bid and the ask is the spread. So if there's a big difference, it means that there might be a lot of volatility. There's a lot of traders, a lot of volume, in theory. Durham Dad asks, if we sell a call, can we be made to buy them back at any point? So if we sell a call, so that's all right. So sometimes an option might not. So yeah, it really depends on what the volume is as far as trying to sell. Take care, Brimac. Yeah, you can always day trade your calls as well. But yeah, like I was saying, options are super super risky because you're putting at risk your full investment. So if you're putting in $200, you could lose that whole $200. With a stock, if you put in $200, the only way you're losing that $200 if that stock delists or goes bankrupt all the way to $0. So Subby Snack asks, so what happens if a put expires? Yeah, so once it expires, it's worthless. It's like, if you were in a supermarket, you own a supermarket, and your banana expires, you're not going to be able to sell that for anything. I mean, in theory, you could, but you'll get sued. But that's not how it works in stocks. They don't let you sell worthless, expired stuff or options. And yeah, Salvador Girl, I will be showing an old option alert just to show you, like as far as like the formatting goes of our options. I think I might have one here. Our Walmart option. So this is what he'll put. So Walmart is the ticker. The WMT is a ticker. The 140 call. So he's doing a call with 140 being the strike price. 918 is the expiration date, and then 50 cents is what that option is worth at the time. So you got your premium, which is the 50 cents. You got your strike price 140. You got your expiration date 918. And this one actually ran for over 742% that day, 523% total. How important is implied volatility when looking to enter? Yeah, so that definitely shows how volatile the stock can be. It shows how if it's going to, if you're looking for, if your call is, let's say 140, and the stock is currently at 110, 100. If there's a lot of volatility, there's a good chance that stock's going to move, either be it up or down. If there's not, it could just sideline. You're usually looking like 60% is like the around what people are usually looking for as far as the implied volatility goes, whether it be a below or above, to see whether that stock might be or option might be worth going for or not. Candy Diet. Why would someone buy a call that's already in the money? Yeah, so that is something you can do. People might do that. Depending, maybe people are hedging their stock. Maybe people are hoping that they can just make a quick buck. It really depends on what the stock is, what the volatility is of that stock. Yeah, and that says, yeah, once the put expires, it is completely worthless. Yeah, same deal goes with the puts. And options in general, once it expires, it is worthless. But yeah, some people will buy an option just to hedge. If they're a short seller, they might buy a call option. If they already have the stock, they might buy a put, just to it's kind of like an insurance policy. Subby Snack says, so what is the 50 cents? The 50 cents here is the premium. And Stephen Naban asks, how do you come up with the strike price? So that strike price, the 140, is basically that's like what he's in theory saying that he will buy Walmart at. He will buy it at 140 at 918 with that option. And in order to do that, he has to do the 50 cents. He has to buy, typically it's 100 shares is how options work. They go by 100 shares. How to buy 100 shares at 50 cents. So that premium is kind of what you're looking for as far as you making your money goes. It's like kind of like a stock. What's a stock? Is that 50 cents? If it goes down to 40 cents, you're losing money. If it goes up, you are making money. So Brizzy Frey. Rizzi says if you have one option and you are in the money and it shoots up, is it better to sell it and take profit and possibly buy an out of the money call, or ride it out even if it dips but is promising to go back up? That's just something that could be asked about stocks in general. Like, hey, I have my profit. Should I take it? Should I hold it? Like, it depends if you're long on it. It depends, if you're day trading. It depends what you're looking for as far as your profit goes. If you're looking for a 10% profit, it hits your 10%, then you should probably take that 10%. If you really think it's going to go up to 40%, like long term, and you have time in your option, then it's really up to you and your risk tolerance. And yes, Sir Raj, I will go over option covers and spread and hedging and puts and all that good stuff in the later videos. Subby Snack, I gotta rewatch this. I don't get the premium. Do you have to pay a premium? So yeah, the premium is basically what you are paying in order to get that option. So in this case you're paying 50 cents, but you can't just buy one. You have to buy 100 shares. So you're buying 50 cents, 100 shares at 50 cents. That's basically your down payment. Your premium, like when you buy a car, you have to pay a down payment. It's kind of like your down payment. This is what I have to pay in order to get the option to buy this car at $10,000 4 years from now. This is how they hold the car for me. Let's just say that's how the premium works. So yeah, Subby Snack. So it's 50 cents premium times 100 shares. Options usually go by 100 share increments. All right, I'm going to be answering any more questions in the PBU chat, and you can find that at discord.gg/btpenny. So make sure you join us there. These classes are soon going to be available to premium members only, the Penny Boys University members. Penny Boy University is free to all premium members. So not only will you get alerts, not only will you get the live streams and the live trading, you'll also get that one-on-one mentorship. You'll be able to get in on the homework, the quizzes, and then if you're struggling with either or, you'll get that one-on-one mentorship. Or even if you aren't, you can still get that one-on-one mentorship if you feel like it in PBU. You also get the alerts and the education. So it's definitely worth joining up on premium, even if you're paper trading. We have a lot of traders in Penny Boys University who are just paper trading. They are using Penny Boys to learn, because that's the biggest invest. You can invest in Apple, you can invest in Tesla, you can invest in penny stocks, but the most important thing to invest in is yourself. Because unless you're just trying to make a quick buck, in 10 days or whatever, and which is probably not going to happen in the stock market, the only way to get better at trading is to learn, is to educate yourself. And there's a lot of videos out there, but at Penny Boys we do give you that one-on-one trading. Like if you have questions, you can ask me. You can DM me on Discord. I'm always around. I'm not one of those people who have millions of dollars who are flying all over the place and too busy to talk to anyone, or too busy trading all the time. I focus more so on the education than I actually do my own trading. I barely even trade myself. So I'm always around if you have questions. That is what we do offer. We offer that one-on-one mentorship. We stress that we're not just here to just lecture you and then never talk to you again. So definitely feel free to DM me. Yeah, direct message. Yeah, right. DM me on Discord. That's What the Duck. Or you can even message me on any of these social media platforms. You can message me on Facebook. You can message me on... I'm actually not even sure. Can you message people on Twitter? You probably can. You can message me on Twitter and Instagram. I will definitely respond. And yeah, definitely join us on Discord. That's discord.gg/pennyboys. So hit us up and definitely hang out. We're going to be having some more options trading classes going forward. These next couple ones are still going to be free. I like to keep them free as long as possible, but soon we are going to start our actual PBU classes. These are like the beta classes, but we'll be starting our actual Penny Boys University classes. And once that is all finished, we'll have a bunch of Penny Boys University graduates in Premium, and you'll be getting a lot of different Subby Snack, a lot of different, a lot of cool things going along with Penny Boys graduates. You get some fun stuff. I don't want to give it all away, but it'll be some great stuff that you definitely want to get in on. So that'll be for all of our OG PBU members. So Pookie's Revenge, Phil, Kev Cave, Jessica Yun, everyone who is in the chat. I appreciate all of you. Brizzy Frey for joining. And remember, you can ask me any questions. You can message me on any of those social media platforms. You can definitely message me on Discord. And make sure to leave a comment on this video. Remember, the best comment, it can either be the best comment or you know what? I'm gonna do it both ways. The funniest comment as well as the best comment are each going to get 5 raffle tickets. Because I don't want to make you all have to be like, oh, should I do a funny comment? Should I do a serious comment? Do both, because I do like funny comments. So definitely definitely join on that. Try to get those raffle tickets. I'll be posting some of the funniest comments on this YouTube, so we can all laugh about it in live stream. So Candy Diet, Breezy Frey, Phil, Subby Snack, Stephen Ibanez. I will see y'all next class. If you're not already in our Discord, join us at discord.gg/pennyboys so that you can join me, What the Duck, and together we can make some bread. All right. Brace yourself for the dubstep. I did not choose it. And by the way, I have a lot of people messaging me on Discord like, "Oh, you like dubstep? Here's a good I don't know, not band, but whatever you call dubstep people." I'm not actually. It's the first thing I could find that was free and that was not monetary, royalties or whatever. I'm actually into punk rock, so I appreciate everyone sending me their favorite dubstep songs. Not my cup of tea. It's just on them. It's just on the YouTube. We will be changing that soon. So take care, guys, and I hope that tomorrow you guys all make some bread.